Okay, welcome. My name is Kyle, and this is going to be an e-tutorial on how to solve problem E8-9 from the Pearson workbook. So we have Adams Enterprises began operations on January 2nd, 2020, depositing $40,000 into the bank. During the first month of business, the following transactions occurred that affected the cash account in the general ledger. And so we have these general ledger transactions here, and they're all cash specific. And then what we need to do is a bank reconciliation. And we're given a bank statement, and that is right here. So just to start this problem, even before I figure out, well, what is a bank reconciliation or why do I have to do it, I'm going to try to figure out what the cash balance is in the general ledger. I'm going to create this balance column over here, and I want to figure out just what is the daily total of cash. So I know on January 2nd, they deposited 40,000 into the bank. And whenever you deposit cash or whenever cash goes up, that's a debit to cash. And when cash goes down, it's a credit to cash. So I'm just gonna go through and figure out what is my daily total of cash. And as of the 31st, by doing that, I know that they had $14,600. Now this in the general ledger. Now this was the long way of doing it. When you're doing this on your own, probably it's going to be a lot simpler for you and quicker. I have the luxury of doing this in Excel, and you often don't. It's going to be quicker to find the ending cash balance. Well, that's just going to be the sum of all of the debits minus the sum of all of the credits, because cash has a normal debit balance. So when I do that, I get 14,600, and it matches what my daily total was, so that's good. 14,600 is the ending cash balance per the books. Now when I say per the books, that means per the general ledger. That's the common terminology used. What is the book balance of cash? When you hear that, it's saying, well, what is the general ledger balance? The general ledger balance is the book balance. So I know here now I have, at the end of the month, there is in the books, or the general ledger balance, $14,600 cash. If I look at what the bank statement said, I got a statement from the end of the month from my bank that disclosed to me all of the transactions that went through the bank account. If I look at the very end on January 31st, I can see there's a $17,960 balance in the bank. You might be wondering, what the heck is going on? Our book balance says 14.6. Our bank balance is 17.9. Why is there that difference? Well, the difference between the book balance and the bank balance is actually quite common, and it could result from a number of different things. Most commonly are timing related issues. Think, for example, if a business has a cash sale. They make a cash sale to a customer. That cash doesn't go to the bank immediately, but you're going to debit cash because you received cash from your customers immediately. So there's going to be a delay from the time you receive cash to the time you actually deposit cash into the bank account. So that's one of many reasons why there's going to be a difference between what's stated in the bank and what's in your books. So in order to solve this problem, I'm going to start by just filling out a template. Now, in your workbook, you already have a template, and I've written just what was in the workbook down below, but I'm going to build on that template. I want to write add, myself some space, and deduct. I'm going to write add and deduct under both the bank balance heading and the book balance heading. And I'm going to also start by just putting in, well, what is the bank balance on January 31st? So I'll just write bank balance, and this is at the end of January 31st, 2020. And I'm going to put in the 17,960, which is from the actual bank statement. That's how much money physically, as of the 31st, was in the bank. Our book balance, though, on January 31st, 2020, was different. It was $14,600. And I'm going to then try and figure out why. Why does our bank say that there was 17,960 when our books say it was 14,600? That's the whole goal of the bank reconciliation. The purpose of it is to be able to distinguish, do we know all of the differences that exist between these two numbers? So the easiest way to do this is just to go line by line through both the bank statement and the general ledger. And I'm going to start by going through the general ledger. We can see on January 2nd, there was a debit to cash of $40,000. That means cash went up by $40,000. So I'm going to now look in the bank statement for a $40,000 deposit. And I can see on January 2nd, there was a $40,000 deposit. So since it is in both the bank statement and the books, it's not a reconciling item. It can't account for one of the differences. It's only a reconciling item and should be on our template if it's not on them both. So just full disclosure here, everything, I put these templates in for a reason: add, deduct, add, deduct. Every line item is going to be categorized under one of those 4 subheadings. Every reconciling item that we find will be categorized under one of those subheadings. So then on January 5th, there was a credit to cash of 12,000. So I know credit to cash is the lower cash. So I'm going to now look on the bank statement for withdrawals in the amount of 12,000. I can see check 1 was a withdrawal, 12,000. So since it's included in both, it can't be a reconciling item. Same thing on January 8th, check 002, credit to cash for 16. I'm going to look now on the bank statement. I see check 2, 16,000. Since it occurs on both, it's not a reconciling item. Then on the 9th, there was cash sales of 16,000, debit to cash. It's going to be a deposit. And I can see a deposit of 16,000 on the 9th. So that's not a reconciling item since it occurs on both. On the 15th, the credit to cash of 10,000. I'm going to look in my withdrawals column, and there's actually only 2 withdrawals left, 74,000 and 48. This 10,000 here hasn't yet cleared the bank. This is a reflection that we wrote a check to somebody, check number 3. We physically wrote it, or this company physically wrote it. They gave it to somebody, but the person they gave it to hasn't deposited it yet. So since they haven't deposited that check yet, the money hasn't come out of our bank. But as soon as you write a check, it comes out of your book balance. So that means when the customer or the supplier or the vendor or whoever we gave the check to actually deposits it, it's going to be deducted from the bank balance. It's already been reflected. The deduction has already been reflected from our books because I can see, well, on the 9th, our cash balance was 28,000. We wrote a check for 10,000 and now it's 18,000. So the deduction has already been reflected in our book balance. It just hasn't yet been reflected in our bank balance because the person we gave the check to hasn't deposited it yet. So when they deposit it, it will be deducted from what's in the bank. So I'm going to categorize that as deduct under the bank balance section of my template. So I'm going to I'll write outstanding checks. Check 003 and the amount was 10,000. I'm going to move forward with this template now, clean up some of it a little bit. On the 18th, there was cash sales of 12,000. So it was a debit to cash, which means if it's been deposited to the bank, it would be a debit or a deposit to the bank. I can see on the 18th, there was a 12,000 deposit. Then on the 20th, a bank loan was taken out, so cash went up by 50. I'm going to look and see, I can see 50 on the bank statement, so that's not going to be a reconciling item. On the 26th, cash went down by 74,000 because this business bought equipment. And then I can look in the withdrawals on the bank statement and see cash went down by 74. And then on the 30th, this company wrote check number 5 for 17,000. So it's a credit to cash, which would mean cash is going down. So I'm going to look in the withdrawals section of the bank. There's only one withdrawal left, and it's for $48. So again, this is the same situation as before. This company wrote a check for 17,000. They gave it to a supplier. So the book balance went down immediately, and you can see the day before on the 26th, there was 6,000 cash. Then they wrote a check for 17,000, which gave the general ledger balance a negative $11,000 balance on that day. So the book balance already reflects the deduction in cash. The bank balance doesn't because we don't see it here. So if I want to get these two to match, if I want to get the bank balance to match the book balance, I'm going to need to deduct that from the bank balance. Well, why? Because when that supplier actually goes to deposit the check, it's going to be deducted from here. It's already been deducted from the book balance. So that was check 05, and the amount was 17,000. And lastly, so we have only one transaction left. It was a cash sale, 25,600. And I can see here, if I look under deposits, I don't see a 25,600. There's only 2 deposits that are left. This means that this organization received cash sales. And since they received cash sales, they did the journal entry immediately. They debited cash and credited accounts receivable or sales, whatever credit would be. It would be one of those two. And they just haven't physically taken that money to the bank yet. So there's a timing issue. So because this is already reflected in the book balance, and when this company physically goes to deposit it in the bank, it's going to be added to the bank balance. So I'm going to call that deposit in transit, cash deposit in transit. And I'm going to put 25,600. Okay, so we're almost there. So I've gone through every line item now on the general ledger. We've discussed all of them. The ones that were highlighted were reconciling items, and we put those in our template down below. But you'll notice here that there's 3 items outstanding still on the bank statement that haven't been marked off. We've got this service charge for $48, a deposit of $2,000, and interest of $8. These reflect transactions that have gone through the bank account but haven't yet been reflected in our books. So we need to update the books in order to make sure that we can reconcile the bank and the book balance. So I'll start first with this $2,000. And actually, this one's a little bit unique. It's unique in that it says in the question down below here that in preparing the bank reconciliation, Adams Enterprises noticed the 2,000 deposit was a bank error. The bank will correct the error on the next statement. So this $2,000 was deposited to our bank, but it shouldn't have been. Since it shouldn't have been, it shouldn't be added to the books. So that means when the bank corrects that error, they're going to be deducting that amount from our bank balance. It should be 2,000. So we've added that into the template, so that's good. The service charge has already been deducted from our bank balance. The $17,960 already includes a deduction of $48. To get these two items to match, the bank balance and the book balance, I'm gonna have to lower my book balance by $48. So I'm gonna go down here and I'm going to label that as a bank fee, and it was $48. And I'm now done with that. And the only other thing that remains is this $8. It's categorized under a deposit. So that's interest we're earning in our bank account on the cash balance that's in there. The ending cash balance on the bank statement already reflects the addition of this $8. But that $8 has not been added to our books yet. So if I want to get these two to reconcile, if I want to get them to match, I'm going to have to add $8 in interest to the book balance. And I'm done. I'm just going to total these up now. So I'm going to make this a little bit prettier for us. So I put the subtotals in this left column, and then I'm going to total it in the right. And I'm going to create what's called as a total here, adjusted bank balance. And add together everything. So what was in the bank, what should be added to the bank once we make that cash deposit, and what's deducted from our bank. So these three items added together equals $14,560. Now, the interest earned, there's really not many adjustments to our books we need to make, just the $8 adjustment in interest that we earned and a $48 bank fee. But I'm going to do the same thing, and that should be negative, sorry. Adjusted book balance. If I did everything correctly here, the adjusted bank balance and the adjusted book balance should match. And that's what we see here. These two numbers now match. So we can account for the differences between what our ending cash balance was in the general ledger, so what was $14,600, and our ending cash balance as per what's in our bank, which was $17,960. So even though there was a difference between these two balances, we're able to explain why those differences exist. And we can do that easily if we populate a template that looks just like this. So what's the bank balance? What's the book balance? Add, deduct, add, deduct. If an item is already reflected in one value, we have to make an adjustment to the other value. So I hope that you found this tutorial useful. Again, this was problem E8-9 from the Pearson workbook. My name is Kyle. Have a great day.